All right, let's dive right in. Today, we're going to tear into a technical analysis report for a super volatile stock, GIPR, and try to figure out what on earth the charts are actually telling us.
You know, the data on this one is sending completely mixed signals. It's a real head scratcher. So the big question we're tackling today is pretty simple. Is GIPR a golden opportunity, or is it a dangerous bubble that's just about to pop? And this is exactly why it's such a fascinating puzzle. Just look at this ride. After bottoming out at only 78 cents, the stock just went on an absolute tear, more than doubling to where it is today at $1.64. I mean, a move like that, it gets everybody's attention.
Okay, so to really get what's happening here, we have to look at this from both angles. Let's start with the good stuff, the case for more gains, all the signals that are flashing bright green.
Now, check this out. Look at the volume. On October 3rd, the day the price peaked, a massive 14.8 million shares changed hands. That is a huge spike. When you see that kind of volume on a day the price is shooting up, it tells you there's some serious buying power and a ton of investor interest behind the move. On top of that, the stock's current price is leaving all of its recent averages in the dust. Think of it like a race car, just pulling way ahead of the pack. In technical analysis, that's a classic textbook bullish sign. It screams strong upward momentum. Now, to get a little more technical, analysts pull out a tool called the MACD. All you really need to know is that it's a momentum indicator, and when its lines cross over in a certain way, it flashes a buy signal, basically telling you that the upward trend might just be getting started. And what's it telling us for GIPR? Well, it's positive. That number you see, plus 0.0372, that's the confirmation. It means that buy crossover happened. For traders who are looking for green lights, this is a big one. And it's not alone, not by a long shot. The ADX indicator is high, which confirms there's a strong trend. The plus DI confirms that trend is powerfully upward. The momentum indicator is positive too. The key thing here is that it's not just one signal. You've got this whole chorus of indicators all singing the same bullish tune. Okay, so everything looks great, right? A straight shot to the moon? Well, not so fast. Just when you think the story is simple, the dashboard starts blinking with some major warning lights. Let's look at the other side of the coin. And this gets to a really critical idea in trading. When a stock price goes parabolic like this, just straight up, it can become overbought. That's just a fancy way of saying the buying frenzy might have pushed the price up to a level it just can't sustain. The main tool traders use to spot this is the Relative Strength Index, or RSI. The easiest way to think about it is like a speedometer for the stock's price. And that 70 mark, that's the red line on the tachometer. It's a warning that the engine might be overheating. So where is GIPR's RSI at right now? It's clocking in at 73.47. It hasn't just approached the red line, it has blown right past it. And that is the central conflict. All that great upward momentum is fighting against this huge warning sign from the RSI. It suggests that the stock is stretched pretty thin and might be due for what traders call a pullback or a cool-down period. And the RSI isn't screaming into the void alone. The price is actually trading above its upper Bollinger Band. Think of those as statistical guardrails. The CCI, another gauge, is at a wild 321. I mean, all these other indicators are basically echoing the same message. Hey, be careful here. So this is what it all boils down to. On one side of the rope, you have these really powerful bullish forces, the strong trend, the huge volume, the positive MACD. But on the other side, you have a whole team of bearish indicators all screaming that the stock is overbought. It's a classic technical tug of war, and that rope is stretched tight. So how in the world do you make a decision here? You've got green lights and red lights flashing at the same time. Well, this is when analysts stop looking at the flashing lights and start looking for a roadmap. And they build that map by identifying support and resistance. Just think of it like this. Resistance is the ceiling the price is bumping its head on, struggling to break through. And support is the floor down below that might catch it if it starts to fall. These levels give us the context for that tug of war. For GIPR, that immediate ceiling, the resistance, is its current high of $1.64. Now, if the sellers win the tug of war and the price pulls back, traders are going to be watching that $1.28 level like a hawk to see if it acts as a floor. And below that, there's an even stronger floor at $1.06. These are the battle lines. So, With those battle lines drawn, the analysis basically lays out 3 ways this story could unfold. Path number 1, a bullish breakout, where the buyers just overpower the sellers and push right through that ceiling. Path 2, a neutral phase, where the stock just kind of moves sideways and catches its breath. Or Path 3, a bearish pullback, where sellers take control and the price drifts back down towards one of those floors. We've seen the bullish case, we've seen the bearish warnings, we've seen the potential road ahead. So after weighing all this conflicting evidence, what's the verdict? What does the report actually say to do? And here it is. The signal is a hold, or neutral. But hang on, the 3 most important words on this entire slide are right at the end, with low confidence. That tells you everything you need to know about how tricky this situation is.
So why a hold? The logic is actually pretty simple. The upward trend is way too strong to bet against it and sell. But at the same time, all those overbought signals make buying up here at the peak feel way too risky. So when you're stuck between a rock and a hard place like that, sometimes the smartest move is to do nothing. Just watch and wait.
And this really gets to a fundamental truth about technical analysis. That hold rating, it isn't a prediction. It's not a crystal ball. It's an honest admission of just how uncertain the data is right now. It's all about managing probabilities, not predicting the future. Which leaves us with one last thing to think about. This stock story is a perfect little case study in how we make decisions under pressure. So I'll leave you with this question. When you're faced with signals that are this strong but are pointing in completely opposite directions, how do you personally decide between exercising caution and chasing an opportunity?